put your hands together for Anil Hansji. There we go, keep it up. Play the music, play the music. Jackie Abitbol, Herman Keenhouse, Peter Cowley, and Laura Gonzalez-Stanovic. Come on up, come on up. There we go, there we go. You guys are great. Good vibes, good vibes.
Okay, so what do we do after this? My goodness. Give me a 4, give me a Y, give me an F, give me an N. Good morning, Barcelona. So we're very happy to be here. We have a very good representation of venture capitalists, corporate investors, angel investors, and me, whatever I am. So the idea of the panel today is make it very interactive. We really wanted to be talking for about 30 minutes and then leave another 10, 15 minutes to talk with you and to get your thoughts, make it more spontaneous, I would say. So before we jump into what we've prepared, I would love each of you guys to give just a 1 minute of presentation from each of you, and then we deep dive into the good news.
Okay, thank you, Laura. Hello, everyone. Good morning. Hope everybody had a good night and of sleep. As for me, I'm Jackie. I'm partner at Cathay Innovation. Cathay Innovation is a global fund investing in 3 continents, China, Europe, and the US. Usually invest in B rounds, or starting from B rounds, where we believe that the companies can really scale and expand. And another angle, but we will talk during the panel, is our corporate, relationship with the corporates, where we, really help companies to create values with a set of different corporates that we have. Cathay Innovation first fund was a 300 million euros fund. We currently are, we invested in 23 companies, and fund 2 that we currently, raising, already investing. Okay, this is for a start. Thank you.
Good stuff. Peter?
Good morning, everybody. So I'm Peter Cowley. I'm an entrepreneur since 1981 when I set up my first business in Bavaria. 14 journeys I've been on, founded or co-founded, and I stumbled into angel investing about 10, 11 years ago. Really embraced it, so I've invested in 67 startups. I've got 5 positive exits and 10 failures so far. I do deep tech, B2B, based in Cambridge in the UK, and I'm currently chair of the angel group there. We invested about 30 million euros last year. 60 of us. But the reason I'm on the stage is because I'm president of the trade body for Europe, the European Business Angel Network, which represents the entrepreneurs and angel investors throughout Europe. 5+ billion investments at our level, at early stage. So I'm not the same as the other people on the panel, and I'm happy to conflict anybody's comments.
Good stuff. So.
Yes, I'm Herman Keenhouse. Good morning. I'm Managing Director of KPN Ventures, the venture arm of KPN, the Dutch telco. KPN Ventures was started 3.5 years ago to really stimulate outside-in innovation and invest in European technology companies to work together with as the new technology partners of KPN. We're a 70 million fund. We focus on Series A and B investments in 8 topics: IoT, smart home, cybersecurity, digital healthcare, cloud, data, networking technology, and OTT. So that's a long list, but it's all telco related, and we're really aiming to build partnerships to bring innovations faster to market.
Good stuff, Anil.
Good morning, Anil Hansji. I run the venture capital team at PayPal for Europe and our corporate development efforts as well, which is predominantly M&A. Been with PayPal for 3 years. Prior to that, with various VC funds and Google. At PayPal, we invest both on the consumer side of financial services and on the merchant side as a 2-sided network, and all of the difficult, complex financial services regulation and infrastructure in between. And we have recently, over the last few years, done 3 or 4 deals. So we're sort of gearing up, hopefully, to do more.
Good stuff. So I'm Laura Gonzalez-Stanovic, founder and CEO of the Venture City. We are a 100 million fund based in Miami. There's a lot of things happening in Miami. We have invested already 25 million in the first 2 years of the fund. We do invest in Europe, Latin America, and the US. We kind of like cover that triangle. We love to internationalize companies, and we do also have a growth accelerator. But let's start by giving a little bit of the state of the art. So last year was a record year in venture capital, was a year that most most money was ever invested. So good news for the founders, good news for us in the industry. Just in the US, it was 130 billion. In Europe was $26 billion. And in Latin America was only 22, but picking up. At the same time, there were these famous mega rounds happening all over the place. And the number of deals were less, but there were larger rounds. So there's definitely a lot of things happening, a lot of opportunities. In fact, one of the things that we like to call, that we want to call out here is that one of the things that we see is that talent is universal, but opportunity is not. Still today, the money is very focused in very specific areas around the world, but we start to see unicorns. 60% of the unicorns are happening already outside of the US, 40% of them are in China already, but it's a very good moment and a very interesting situation globally to kind of like start your business. So, let's start by the questions, which I think is the most fun thing of this morning. So, talking about the situation, having this representation as a panel, where do we think disruption is happening? Is it that it's cheaper than ever to build a tech company? Is it that there's more money available? Is it that there are more corporate VCs coming into play? There are more angels all over the world investing? Is it that we need diversity? What is it? Where's the direction that we really, that's in our hands that we really can make happen? Who wants to start? Okay, Jackie.
I'm the first. Okay. I would say that ecosystem will be maybe the first thing I will think about it answering your question. So first of all, we've managed to create an ecosystem around the world. I mean, if you look at, at Cathay, we invest in 3 continents, and basically what we've made is connecting. all these hubs. Technological hubs, where you have, of course, entrepreneurs, where you have, technology, when you have, I would say, high profile or, engineers, where you have the money, and the money can come from the government, the money can come from the business angel, the money can come from the corporate VCs, the money can come from the investors. But all of this, within the concept of ecosystem, will not happen. So I think that the disruption will really start because we have today, when we think about the world, it's connected, of course, but it's a global. And without one of these pieces, feeling or being part of that puzzle, things will not happen. And I think for an entrepreneur today is, I don't say it's easy, but if you have a good idea, first of all, you know where you should go. Some years ago, and I'm sure that Peter will talk about it. You have the business angel that will support the first thing. Then you have like the A series fund and so forth. And what we did at Cathay, when I talked before about the corporates, we are a pure financial fund. However, we believe that it's not only about investing in the companies, it's also bringing value to the companies. And how do we bring that value? So to create that concept, and to benefit from the ecosystem. So this is where we rely on a certain, numbers of strategic partners, which are corporates, and they are that part super relevant because first of all they can bring business to the companies because you have a great idea and okay, you have to test it, you have to do some pilots, but then if you want to scale, you have really to move into a commercial phase. So this is where these are potential customers in the different areas where we invest in, and also these are potential exits for the startup. So I would say that that notion is what today is highly benefiting the startups to be successful in a certain point.
I think that what you mentioned about being more operational, it's something that we see all over the place. What do you guys think about that? I think that now more than ever, founders choose the VC more than the VC or the angel network choose the founders. There has never been as much money as there's available right now, but the good entrepreneurs are still not that many. So what are your thoughts there?
So I think you're right. Maybe it's not day-to-day operations or operational experience, but definitely VCs need to up their game in value add.
Yeah.
So partly it's operational experience, partly it's their network. It's using the things that they have to support the portfolio companies. And indeed, there's much more money available. There's much more options available for funding, and some are commodity capital without value add, but some are really value add. And I think what we see is that actually you also then see specialization. Because when you're a more specialized fund, you actually can add more value in that topic. So that's what we also like to do, for example, in cybersecurity, which is one of our key topics. We have super brilliant cybersecurity experts within our company that we also use to, to support the portfolio companies. So that's one way of doing it. Maybe one other thing about disruption. I also think that VCs need to sort of innovate in terms of digitization, and then actually lower their fees and lower their overhead, because things are getting cheaper and cheaper through digitization. So that's the other side of the coin.
Performance should be in both ways, right? And Neil, do you want anything to add?
On the disruption
Piece, yes. What do you think is going to happen, or what we should do that we're not doing yet?
Well, I think actually we're a fairly lucky group of people, not just on the stage, but actually in this audience, and we are really not representative of the market. And for every person here, you have a unique opportunity to connect with an investor on stage or elsewhere, but most people don't have that. So I actually believe that venture capital is a dated, homogeneous construct that is calling out for change. And I think we are seeing the edges being chipped away already. We have, in the US in particular, a lot of noise around women, a lot of noise around different races and backgrounds and how much percent of venture capital they have access to. We have the conversations that you represent well in Miami, that actually venture shouldn't be based in London or New York or San Francisco. It's everywhere. We're hearing these noises. At the same time, we're also hearing new structures of funding, such as crowdfunding, such as regulated crowdfunding. And obviously securitized tokens that the blockchain has introduced. These things are really just noise at the moment, but I think the industry is calling out for radical change, because at the end of the day, as Paul Graham of Y Combinator said, I can be tricked by seeing somebody that looks like Mark Zuckerberg, and we need to think out of the box. And we need to force that change on the industry, because the rest of capitalism is not as homogeneous as venture capital. I mean, as an individual person, I can choose where I invest my money into the stock market, and I have many ways to fund a company. I have brokers, I have direct, I have wealth managers, you can do debt, you can do equity, but we don't have this choice in building venture capital. And I think this is where the real structure of disruption will happen. And I think 4 years from now, we won't be sitting here on stage talking about what will happen. We'll see much more diversity. We'll see many more instruments that can be alternatives to the classic venture capital industry. I want to end by saying that I don't believe that venture capital is broken. I just think that venture capital, as we know it today, represented by the funds, only appeal and should only appeal to certain types of startups. But that is not the the majority of startups or the majority of people.
There. I couldn't agree more. Peter?
Yeah, well, there's a little bit of a discriminatory thing, because there is actually a lower amount, certainly in the UK, the capital is reducing. There's no doubt this, obviously because of Brexit and other things, there's uncertainty. But also it's becoming more choosy. So we've got to the point now where we used to buy equity, and now we're having to sell cash to some extent, but only to the serial entrepreneurs. These are the ones who've done it before, the ones who've got more higher value. So what also has happened certainly a lot in the last decade or so, that entrepreneurs are wanting to get their cash from people who can add value, certainly at the earliest stage. The smart money is becoming more and more important to them, not to some. And the ones that are just looking for cash, maybe crowdfunding is the way to go. They'll certainly get higher valuations. What they won't get is the experience that you'll get from somebody else. Because in the end, assuming there's lots of entrepreneurs in this journey, unfortunately, if you take external investment, 3/4 of you will fail. And if you can reduce that number by having somebody around you who's going to help you, whether it's anybody on the panel at all or anybody else, you have got a better chance. And bear in mind that you will fail primarily because we will stop it. The investors will not continue putting funding in, and you won't have got to break even. Now, I speak more as an early stage because the VCs have got more access to capital, but please bear that in mind.
Yeah, so I think that one of the good conclusions of this first question is that obviously the more operational, hands-on, truly hands-on and expertise you have in the venture arm, the better for those founders. And I'm talking about data scientists, engineers, product specialists. Go.
Yeah, maybe I'd like to add something because Peter was mentioning about smart money. I mean, what is smart money about? So, and when we say anything it doesn't matter if you're a business angel or early stage investor, a corporate, or just a pure financial investor. So basically, all of us have a network of contacts, and when you see a good company and that you believe you can help, so you say, well, I know this, I know that, I will connect you to that. But reality is that the good entrepreneurs, not the good entrepreneurs, the companies that have the position or are in the position to choose which one they want to go, they want to partner with, they will test you. They say, okay, great. So you have, let's say, all this range of corporates, investors in your fund, but how does it work? I've struggled working with corporates my entire life. So why do you think that Cathay will do better? So, and this is a model that we've developed. A relationship, and we have, I think, in the room, one of our corporate investors who can really also, confirm what I'm saying. It is really, when you say, I have all these networks, I can bring you business. Show me the money, show me how you're going to do it. So, and this is something that is becoming more and more critical. So to bring, you're right about the operational, but it's also about the value you're creating for the startup and demonstrating. And then if you look at, 2 years down the road, the new companies you're looking at, they'll say, okay, you know what, I want to talk to the guys you've invested just to confirm that the value you said you can bring, you really brought it to your portfolio companies.
Yeah, in fact, the due diligence process should be both ways, from the founders to the venture capital or where the capital is coming from, and in the other way around. And one thing that I hear more and more is that, from at least what we really try to do, if there's a problem, I want to be the first to be called because I really want to see if I can help you. And if I can be predictive, helping you in a potential iceberg, in a potential deep, this is what we're here for. So this is good news for the founders community. On the second thing, and you touched on that, Anil, and I couldn't agree more. There's more and more companies growing in different places around the world. Not all of those founders are getting the access to capital that they deserve, and there's that diversity of thinking, of geography, of gender, obviously, needs to happen. So in your respective firms, world, networks, what are you doing to embrace diversity? For example, I'm going to start. So we're 2 female general partners, one Argentinian, myself from Spain, both of us based in the US. And one thing that we've started to do is that we are fast-tracking the companies that are female-founded or with a female in the leadership team. It's very sad to see when you get all those pitch decks and those executive summaries with all dudes in suits. It's very kind of like sad to see that, and more we're going to really try to fast track those where there's more women or where there's people from markets where you normally don't see founders. So what are you guys thinking? What are you guys doing? March is the month of women, so you'd better have something prepared.
Yeah, well, women in the audience, and probably you, Laura, won't like this, but I think we've got to end up with a quota to start with.
Okay.
I was on a
I don't believe in quotients.
You don't?
I don't.
No, you don't.
I just want more women.
But we're
here.
really struggling. Yeah, we're really struggling with it. I was on a panel on Monday last week in Istanbul, and there were 9 males on it. And the first thing I pointed out when I picked up the microphone, this is completely wrong. If I'd known this, I wouldn't have even been on that panel. Luckily, we had somebody from Ghana, so at least it wasn't 9 white males on it. Wow. So the Cambridge Angels, terrible situation. We've got 60 members, only 5 women. This is mainly because we're exited tech entrepreneurs, and there just aren't that many exited female founders yet. But it is changing. It's all very well, we do need it to change more. And diversity shouldn't just mean females as well. It should be other genders,
Yeah, absolutely,
youth, age, etc.
cultures, absolutely.
And it is changing gradually, but the risk appetite of both female angels is quite different. They tend to have the feeling that the risk should be less. They don't like networking much with males. There's lots of reasons why angels, but we still have about, if you take the crowd as well, we have probably 25% female in the UK. If you take the non-crowd angels, we're probably still at about 10%. Female founders at about 15, 20%, but it's growing several percent a year obviously from a low base.
Yeah, yeah.
So, and diversity is so important. Diversity is important on boards because you get different views, etc., founders, etc. So it is a process that's going to take a while,
Yeah.
but as long as we put some pressure on it, it will happen.
Yes. How many female founders do we have here, or female investors? There's only 1, 2, 3, 4, 5. Okay, venture capitalists, have a look.
Very good, very good. No, we have to, we have a responsibility to really change the status quo, and therefore we have to try a bit harder.
Yes.
So I do believe in quota or sometimes just to change the status quo. At KPN, at the corporate level, we have a quota for female leadership. So that's what we do as a corporate. In my team, we really try to build a diverse team. It's a small team, only 5 people. We have 1 woman. So, not good, but working on it.
It's in the mindset.
And then on a personal level, I'm trying to support female entrepreneurship. I'm a mentor at the Next Women, which is a network in the Netherlands. And, I'm actually refusing to be in all male panels as well. So, as you mentioned, so
Good
yes.
stuff.
For us, it's quite easy because we're a global fund. So we have a mix. If we look at cultures, Chinese, European, Americans. We have our partner in China is a French guy who's been living in China for 17 years. The 2 co-founders of Cathay, one is Chinese, the other one is French, living in San Francisco. And in terms of women, head of China is a woman. We backed, I think, 4 companies out of the 20-something in the Fund 1 women entrepreneurs. So I think that, for us, it is true that most of the entrepreneurs, I would say, are men. That's true. Most of the management team is usually a man, but we're really happy, to back, a good project. It doesn't really matter if it's a man or a woman. I will really encourage, women to do more, to be more entrepreneurs, because the examples that we have.
More women in STEM. We need more
Yes,
women in STEM.
yeah.
Yes. From early days, right? So we have 3 minutes before we go into the Q&A. So one of the things that we also wanted to share openly with you, it's the fact that we've been talking about how things are going to be changing, how the due diligence process needs to be both ways, how we're going to try to make everything as diverse as possible. Now, talking about fundraising, one thing that I don't often hear in panels is the pain points for the VCs to raise capital as well, or for the angel networks. So I truly empathize with the founders when they are going, talking to VCs or angel networks or crowdfunding platforms, etc., and they're trying to raise capital. Also on our side, it's very hard to raise capital too. And normally we try to raise way more money than the traditional or the standard founders. So in that perspective, what are the pieces of advice you would give to those that are looking for funding right now, that came from 2 to 4 years from now and are looking for a seed or an A or even a B? What are the pieces of advice that you will tell them when approaching angel networks or venture capitals, institutional or corporate VCs? What are the things that you would tell them? Who wants to go first? Peter.
Well, as a corporate VC, it's a different story in fundraising.
Yes.
We have 1 LP, which
Yes.
that was an easy one. Actually,
Makes things easier.
the corporate decided to start this initiative, and I was attracted to run it, not to sort of get the funding together. So I can't comment on that. But we are also an investor in venture funds. So we have invested in 6 funds.
Wow.
And so we see a lot of funds that are fundraising.
funds, yeah.
And I think that also there, they actually also have to show value add towards their LPs when we're a corporate LP.
Yes.
So what we are building with those funds is a partnership where they're also sharing information on their insights, on their deal flow, on potential partners that they find for KPN to work with. So that is something which is also important for a fund, I think, in working with corporate LPs.
Yeah, and I think that the corporate investors corporate VC is something that has started to peak in the last few years, and there's a lot of kind of like bullshit in many ways, but there's a lot of corporates that are doing amazing things. I can come up with many right now that are, that founders talk about because they really deliver on the promise of helping them grow and stuff. So it's good momentum, and you're right that you're lucky that the corporate KPN is supporting investing in other funds, but also investing in the business.
So just briefly, because I'm often asked this by entrepreneurs. So do your research. Make sure you approach the people you want to have money from, and B, likely to give that, because otherwise you're going to waste your time. You're going to waste our time as well. So I get about 1,500 deals a year coming into my inbox, and I invest in 1 out of every 200. So 199 people out of every 200 have sent me emails that they've wasted their time on that. Now, I'm quite different personally, because I actually publish all my criteria and my investments, etc., on my own website. I've also written, sorry, this is a plug, but I'm an entrepreneur, remember. I've written a book on this, which is about how to work with angels, how to work with VCs as well. And but if you take the EBAN, so I put my EBAN hat back on, we do a lot of networking events to connect investors and investees. We do a scale up of the month. We do as much as possible, particularly with cross-border, because again, this is something, I live in my little ivory tower in Cambridge in the UK, where we've got so much going on because of our tax reliefs, etc. But Europe is somewhat broken in terms of where the capital is and where it needs to go to.
Yes, sir. Thank you.
Okay, so two pieces here. I mean, the corporate relationship and then the advice for the entrepreneurs. To Hernan, I fully agree. We have quite a good examples about the collaboration, and but basically, why corporate funds have invested in Cathay, or why other investors, and we're backed by corporates, by family offices, entrepreneurs, and of course by institutional money. But so, why they're backing us? Okay, first of all, because we have a strategy, which makes sense. So this is something applicable for the entrepreneurs who want to do something. So different, because we are in 3 continents, so we see what's happening in 3 continents. We have a global activity, global presence, but a global vision. Okay, yeah. So be ambitious. So when you look into a project, and when you present projects, so try to think about scaling up the company, and really that showing that there is a potential. And then of course performances or results. So if you're looking for let's say raising B money, so then of course having proven what your company is doing in the local market, maybe demonstrating that you can do this, you can duplicate the model, and then scale. And then I wouldn't say that money is easy. It's easy to get. There's a lot of money. There's a lot of liquidity. I think this is a great years for entrepreneurs, for funds, for business angels, for return. But it's difficult. Because at the same time there's a lot of money. There's a lot of entrepreneurs. There's a lot of different projects. So you really have to differentiate yourself from the competition.
Anil, would you like to add?
Yeah. So on the corporate thing, I think and I feel okay saying this because I am a corporate, but the reality is that most corporates don't really do a very good job. And the first wave of corporate venturing was pretty much a disaster, where we came in when things got tough. The CEO changed or the strategy changed, and then suddenly we're not there anymore, and that's a disaster for companies. Or a lot of corporates put on like onerous terms around rights of first refusals and things like this into companies. So I think there's the next generation of which I'm hoping that you and I are representative of that, have learned a lot of lessons around what was done wrong and what was done right. And I think as a company, you have to decide, even though we've learned these lessons and are much more pragmatic and aligned with financial VC terms, most of us anyway, you still have a very different proposition or a nuanced proposition going to a corporate or involving a corporate versus a financial VC versus an angel. And I think you have to decide, what kind of company you are in, because like I'm boxing things to make it very simple now. But like if you go to a Series A, Series B VC, you have to recognize that their goal is to get 100 times money given the risk profile and the obligations to their LPs. And so you have to figure out, can I build this company that's suddenly worth 100 times more, and what's my stake going to be in it? And that's a very different sort of return profile. I'm not saying corporates don't have that return profile, because most good corporates also recognize that they have to make money in order to convince their board to give them more. But we have other agendas, right? We can be very interested in learning about and observing new trends where maybe the corporate moves too slow to execute. We can be very driven by the opportunity to experiment in a way that you can't do just purely from a commercial relationship. We can be very driven. Maybe some of them are driven by like an option to observe and acquire later. I'm not saying all do that, but there are different drivers in a corporate, and in an angel there's also a different driver, right? That angel can be your personal mentor and your coach, but that angel doesn't have deep pockets usually and isn't going to be around for the A round and B round. So you need to understand and figure out which box are you in. Often companies sort of span multiple boxes, but primarily decide what is the company you want to build. If it's a lifestyle business, if it's a business where you want to maintain control, governance, then it isn't venture capital for you. And is it a business where you want to align yourself to a corporate? Then maybe it isn't right for you to do corporate venturing. So I think that's the fundamental question to ask first. And I'm simplifying for the, to make a point, but things aren't as black and white as that, clearly.
Setting the right expectations and defining the right goals is key for any relationships during the life of your company. If you want to partner with a corporate, if you want to be invested by a corporate, if you want to be, working with a very particular angel and staff. So I think oftentimes most of the problems arise when the expectations are not aligned. So it's very, very important that from the very beginning, not only in the terms, in the legal papers that you will sign, but also in that personal relationship. 80% is the relationship between the partner of the fund or the angel and the founder, right? So it's very important to get aligned in expectations. Do you guys want to add anything before we go into questions?
Maybe a quick thing, our approach is we prefer actually to create a consortium of investors that are complementary, so that each add value, each add different values. So we work with financial VCs, we work with other corporates, with maybe even angel groups. So you create this group that adds a lot of value in total. I totally agree that we need to be fully aligned with other investors, so we aim for financial exits as well, aside from building these corporations that add value as well. But I think creating, as a founder, you could think, okay, I can actually have maybe best of both worlds, not necessarily choosing one.
Yeah, and the good news also is that there are more and more founders coming into the investment world, and one of the things that made Silicon Valley very successful was the fact that those that made it were reinvesting in the ecosystem, and I think that more and more happening all over the world.
So very briefly, bear in mind at the very early stage, we as human beings are investing as you as human beings. You're coming up with a valuation for a business which is meaningless by EBITDA multiple, by ARR multiple, so we're buying up part of your future. And at the same time, you're allowing us to buy that, so that relationship has to work well, which is why we do DD, as mentioned earlier on, we do DD on you. So it's human to human. So it took me about 4 years to realize, because I'm really geeky, I've got 2 wearables on, etc., to realize that it doesn't matter what the product is or what the market is at very early stage, it just matters what you're like. Whether I believe you've got the ability to take my money, prudently use it and grow a business. That's what it's about, relationships. Different at the VC level because business models are starting to be proved, etc. But just when you get angel investments, I often say this, and I'll say it again, it's like a marriage, but it's stronger than that because you can get divorced, which unfortunately I have done, but you can't break the bond, which is I've given you some money, you can't buy my share certificate back because you can't afford it, and I can't sell it to anybody else, so we are stuck together.
Yeah. Anything, Jackie, do you want to say?
No, I mean maybe just saying, commenting on Anil's point of view regarding, corporate VCs, what they're doing today, and I think I agree that before, the first generation, I would say that maybe it was a little bit different. Now, and even from the entrepreneur's point of view, so entrepreneurs now, before they didn't want to have a corporate fund because they say, okay, maybe they would block me for the exit, maybe I'm tagged with this corporate, so then I cannot work with the competition. And what we see today is that, first of all, they adapt to the terms, I would say more financial terms, okay, so then giving comfort to the entrepreneurs. And secondly, in our case, so most of our partners, they do co-invest with us when it's relevant to the company. So we do not force, of course, the entrepreneur to take the money, but if we believe that they can bring value, and that value is significant enough, so then it's a natural match. So we cannot force the partners to invest, okay, even though they're investors in our fund. And sometimes it happens that the entrepreneur, says, okay, I can develop something new, I can expand into a new region, etc. So that corporate will really help me. So, we talked about the corporate maybe because we have a couple of them in the panel, but I think that new generation definitely makes a lot of sense.
Yes, I agree.
As part of the ecosystem.
So just to summarize what we've talked about before going into the questions, more operational partners, really due diligence, the VC really understand if that marriage is going to work over time, because normally if the funds are normally 10 years history at least. Think about the ups and the downs. It's always about the partner, the relationship, the human being relationship through the ups and the downs, not only when everything is beautiful and great, and make it more diverse, right? This is what we would say. So, going into questions, who wants to start first? Do we have mics in the room? There's one here. Yes.
A question for Jackie. So at one point you mentioned that as a startup founder, it's important to test the venture capitalist. So my question is, how would you actually go about doing that? How can you actually test the VC as a founder?
Judo.
A very good question. In the same way that as investors we do due diligences on the entrepreneurs and on the company, so you can do the same thing regarding we. As investors, we have portfolios. You can talk to the entrepreneurs. If we say, the example that I gave earlier was, sometimes we can bring value with one of our strategic partners. You can talk to that partner to really, understand, what is the commitment. I would say, nobody can really commit on the business because you have to demonstrate what you can do. However, what they can tell you is whether you're talking to the right people and when you're targeting a corporate, usually there's a lot of people to talk to. There's usually a lot of decision makers, and what we try to do is really, to shortcut that path toward, say, to a business or relationship, and then making sure that you're discussing with the right people in front of you.
Yeah. Laurence, I know this female founder well. She was my boss.
All right. I'm Laurence, indeed, from Womb Fertility, Women's Health AI. I have a question on corporate venturing. How do you keep the independence somehow regarding the strategy, the industrialization, the potential exit? And when is the right time to get into a corporate venture?
Who wants to go? Herman?
So we have an independent investment committee, and we can make decisions also separately from sort of business sign-off. We don't need that in our investment decisions. So basically you have to be at a high level in the organization with high level commitment to be able to do that. And I think the right time for a startup or an entrepreneur to engage with a corporate is not too early. Because you need to have a certain sort of commercialization, commercial product that you can work together with the corporate. And of course you need to have the patience and the time to be able to work through this process with the corporate to building the partnership. So that's the thing. I think on the investment side you can actually engage a bit earlier if they have an independent fund, because if it's an independent process they can go faster on the investment. But building the corporation itself might take longer because you need all the business units to work there as well.
Would you agree that building the relationship, the sooner the better, works? Thinking about the investment maybe later once there's traction, but building that relationship between that company should be the sooner the better. Any other questions? Don't be shy, guys. No?
Someone have a startup they want to pitch to these guys?
So
That was literally an opportunity.
yeah,
They
so we
don't
have 1
it.
minute to go. Do you want to just briefly say what you're looking for in case people want to grab you after the panel?
Yes, I mean, first of all, I mean, since we're in Spain, so I would say that in the past years, I mean, ecosystem, the tech ecosystem, the entrepreneur space, etc., is really booming. So we are really proud investors in 2 companies here in Spain, Glovo and OnTruck. We are doing, I mean, great. So I don't know how many Spanish entrepreneurs do we have in the room, but I think this is amazing. And what we're looking for is, I mean, amazing entrepreneurs. As I said, B rounds. Usually we invest 8-10 million first ticket in the company, and scale, ambition, and global is something that is definitely super important for us.
Peter.
So with my EBAN hat on, then just go onto our website. We have a number of different themes like health and impact and space, etc. And we've got lots of events throughout Europe throughout the year. With my own hat on, my criteria, as I say, are on my website, petercowley.org, and one of those criteria is no more than 90 minutes by public transport from my home in Cambridge, and I can't quite get to Barcelona unless I had a private jet or something, so that does limit my own investment strongly.
Herman.
Yes, well, we're looking for European teams that have, promising technology, that have a commercial product which, is creating traction, but they need support and capital to scale, and that they can work together with a telco to bring that to customers. I think that is what we look for in the topics that are relevant to us. I already mentioned them. So.
What stage?
Series A.
Series
That's
A.
the perfect sweet spot for us.
Okay, Anil.
Obviously, we're in financial services. I would say, however, more generally, that corporates are very good at tackling and investing in really complex issues because we know the industry so well, and very large-scale issues. So, like for me, I would like to see how we bring a huge generation of people that are not engaged in digital financial services into the digital world. And I think that's, for me, the impact investing that a corporate could do. And I would be very excited to see big scale opportunities to move the mass market of people who just don't have access to basic financial services into the digital world.
In our case, we are very generalist. We don't do hardware. We invest 1.5 million, preferably Series A, but we have done Bs as well. We do invest in the US, Latin America, and Europe. And we love passionate, diverse founders with very high ambitions to internationalize businesses from Europe to the US, from US to Latam, from Europe to Latin America. So this is all. I hope you found it entertaining. Enjoy Barcelona. Grab any of these guys if you're looking for funding. And thank you for listening to us. Thank you.
Guys, put your hands together for that incredible panel!